What is up, traders and investors? It is Mr. Cheese and Chart Doctor back again with another this or that video on Uber or Lyft. So before we get into the fundamental and technical analysis, we'll be handing this over to Chart Doctor with the disclaimers.
Once again, this is just a friendly reminder. We are not financial advisors. This is not financial advice, but our opinions, ideas, and analysis of the stock market. As always, do your own due diligence and research, as these markets are extremely volatile and risky. Do not invest in something that you do not know. Everything previewed here are merely suggestions and ideas. Now that we got that over the way, let's get started with the This or That episode 2 of Uber and Lyft. What is up, guys? This is Chart Doctor with another technical analysis on Uber. So let's get started. We're looking at the daily chart. As you can see in the past, we were creating this rising wedge, which is a bearish pattern. We're making higher highs, higher lows, but we're kind of caving in at the end, which causes pressure, which releases to the downside. So as you can see, we've just been in a downtrend. So the profitability on the uptrend is not as efficient to the compared to the downside. Since we were in a downtrend, we never made an uptrend formation. So let's say, for example, you could trade the microtrend because it's just technically in a downtrend, because as you can see in July, we've never made it past $44 ever since, right? So we went down, held the 42 cents, or since we're looking at the past, so we can just look in the past and see what's going on. Now that we waited so long, we have so much data to use. So that's the great thing about having a lot of history for price action. So as you can see, when we hit $44.46, we tested it, fell down out of support, but then we held the $38.93 range, went back, tested the $42 range, fell down. Couldn't hold the $36 support. There was just not enough bulls to support it. Maybe there was also bad news in earning reports, so that also caused it. But also, we landed to the $33 range, $33.60, and then we bounced back up, couldn't hold it as support for $36. So you could just be trading this, like testing, look at the candles, see how it's reacting. If there's not enough momentum, you don't see any blue candles, you could sell. Buy at a support level. If it holds, you buy it, and then you just keep going. If it goes up, if you notice it's in a downtrend, then you don't hold it for too long. So as you can see, $33.60. You're just trading the micro. You're basically just trading the micro trend. So for example, let's say there's been a downtrend from $36 to $30, right? So you just draw across the line right here, and as you can see, you could have just traded this micro trend right here, and just basically keep doing it back and forth. As you can see, it went up and it failed again. You could do those options on here. You could have done to the downside puts. As you can see, back up, down, crossed up, it went back up. There was probably a harmonic pattern here, by the way. So it went, each time it breaks past these trend lines, which indicate a break of a trend, it has to go the other way, or it just continues. So the more price action you have, the better. So as you can see, yeah, so it broke down here. Now you go up, right? Just keep it simple. As you can see, also when we formed a lot of these resistances, you could have formed a trend line right here as well. So that was good. You could kind of predict where it's gonna go down. So as you can see, not enough buyers, so it just went straight down. Didn't hold the support of this trend line, went down. So now currently, we formed this trend line right here. Sorry, let me move that. So currently formed this trend line right here, but then we also held support right here. So we're currently trying to see if this $25.64 holds and we have a bullish candle right here, then we're gonna have to test the 28. So once you see like a bullish candle, if we break above it, then we will go to the upside and test the $28 range. So you could probably enter at 25, have a stop loss. But as you can see, we're in a downtrend, so you're basically trading the microtrend, so you have to get in and out really quick. So overall, to the downside, if you're short selling, would have been way better for Uber, because we've just been clearly in the downtrend. So basically, yeah, 25.64 is the support right now. If we hold that, we will test the $27 range. And then if that holds, we will go to $30 range to test, and just basically you just keep going to the trend. You continually just use these trend lines. So right now we're currently in this support right here. So let's say we just hold this, and then we don't hold, we go to the downside, and we're gonna create another support line. Then we're gonna have to use in the future. So, but if we do hold this and we go bullish, then that's a good sign. We break above $28.27, hold that support. But also we could be in this descending broadening wedge, which is a bullish pattern in the future. So as you can see, we're just gonna be either in a falling wedge or descending broadening wedge. So currently, as you can see, if I highlight this bigger, and two possible patterns right now. Both are downtrend patterns, but long term they're bullish. As you can see, the black lines, which is a which is a falling wedge, which is downtrend, but in the future it will go up. And if we go to test, if we break above this falling wedge, we might test this blue line, and we might fail it, and then we might just actually be continually going down. So we'll have to see what happens right here. This is a very important level to test. So yeah, just trade the trend. If it holds 25.64, you go to 28.27. It held the support, as you can see. There were buyers here taking control. Two bounces and another candle went up on the daily. So just trade the trend. But if we do go to the upside, we will have to test. Definitely have to test 28.27, 30.65. Just keep holding these. And if we do hold these, 33.60, and then there is this range where it's really important to test, which is the $36.10 range, as you can see, which is right here. There was support here as well, or it was support here, but failed and retested as well as resistance. So now that is our resistance that we need to break. 36.10 will be a reaction level that we will have to test. If we hold above, if you can break above it, for example, we break above 36.10, we go 38.93. We hold 36.10 as support, we will be bullish. But if we don't hold 36.10, we will be bearish and go 33. We might retest. There might be like just retests and market noise, but overall, that's what I'm saying. That's the trend. So $36 is major resistance right now for the downtrend. So currently, just in the downtrend, we're testing these two patterns right now for Uber. So thank you guys for watching this technical analysis for Uber. Let's go over to Lyft. What is up, guys? I'm back here with the technical analysis for Lyft. So let's get started. So clearly we were in a falling wedge in the beginning of the formation of Lyft. We started from $80 and went all the way down to 47, but we were having some resistance support touches which formed a pattern, eventually bringing to the upside. But before I get really technical, let me show you something. So currently we're right, this pattern, right, and went to the upside. Looks like we're doing that in the macro trend. So currently we're in this bigger pattern. Looks like in the future, this is just me being my prediction mode, so just take this with a grain of salt, but looks like we're gonna do that in the future for Lyft. So right now, that's what I'm saying. We're currently creating kind of like a fractal, like just in a longer time scale to the upside. So right now, well, not all the way that high, but just like to at least the $56 range or the $62 range, around there. So currently, as you can see, before we went this falling wedge and we went to the broke up to the upside. After, there was probably some value point, also support. If we go back in time, have the support levels and resistance laid out. We bounced down to $48. This was probably a value level that people thought was a good entry. So the bulls took control of the bears and went to the upside. At that time, buyers and sellers were thinking this is a value point. Sellers were thinking I probably have to sell this because this is probably a really good buying point, and buyers are also buying in right there. So that's in the combination of that creates an uptrend. So you see, when we went to uptrend, we actually broke down out of it, but then retested it before coming back down. So now we're in the downside. As you can see, we were just knocking back and forth in these resistances. Went to this resistance, went to the downside, and then clearly just in the downtrend in this pattern. Falling wedge is a downtrend, but in the future trends is a bullish pattern. As you can see right here, clearly in a downtrend before bringing to the upside. So we're just doing that right now, just to keep it simple. As you can see, we broke this trend. So we broke out of this, went to the upside, right? Now we broke out of this uptrend now, and now we're just testing this $43 resistance. As you can see, it held us support here one time, and also was resistance right here a couple times, and now currently we have a lot of reaction right here. So currently this is a resistance that we're trying to test. So if we can't hold this candle, we're gonna go to the downside to $37 range, and if we can hold this, as you can see, we're at a very low part, like currently just in a downtrend. So this whole time it would have been very efficient to go to the downside. Puts after this broke, this clearly good for puts to the downside or short selling in general, not even with options. But $43.46 resistance. If we break above, we will test this black line before we test this blue line. So we might have reaction here. If we do break above, we will test this. So just keep that in mind. So if we test this black line, we don't break above it, we will continue down to 37. If we don't hold 37, we will go to the downside to this black line. So trend line. And these trend lines have been touched multiple times in the past, so yes, that's currently the situation. But so just currently in a downtrend, we will continue down. We might even go lower. It is possible we will go lower, so keep that in mind. Sorry, that was the Discord. By the way, join our Discord. This great server, great community. We have Mr. Cheese here. We got the fundamental analysis, and we got amazing group of people there. Just a great server to be in. So you guys check that server out. It'll be in the description below. And yes, so currently sorry to digress, but $43 resistance. And if we do break, let's say we do break up here. That's just prediction. We break up, or just for example, we break up. We'll test 49. Might retest it before going to the upside, but I feel like a major reaction zone will be around the $56 range because this was previous support plenty of times, and it will be a major resistance. Also the $49-$23 range will be a major. If we do break up to the upside and start going to the uptrend, then yes, those are the reaction levels I will be watching, because those were the levels. 56 and 49 were the levels that were very reactionary, and there was a lot of interest there because there was a lot of wicks reactions and there were a lot of touches there. Price loves to go to levels where there's a lot of interest. Keep that in mind. So yes, watch these levels, see if we go to the upside or downside. If you see a big candle to the downside, be careful for fake outs, but if you do, then we will continue down. This might be a support to test first, so keep that in mind before we go to down to 37. If you don't see that hold, then yes, we will touch this black line. And if we do hold this, then we will test this black line before going back down, or we will go to break up to the upside. So keep that in mind. That's what I'm watching right now. So thank you guys for watching for Lyft. That was my technical analysis. I hope you guys enjoyed it. Don't forget to join our Discord. I really enjoy helping out everybody and just teaching in general, because I also learn as well. I'm constantly learning every day. I know I'm not the best right now, but I'm just continually trying to learn as well. So thank you guys for watching. I'm gonna hand this over to Mr. Cheese for his fundamental analysis, his great work, and I'll see you guys next time. Peace.
What is up, guys? It is Mr. Cheese back again with another fundamental video. Now, before I head into the fundamental analysis, I'd like to thank Chart Doctor for that amazing technical analysis on both Uber and Lyft. So let's just head right into the fundamental analysis on Uber. So Uber Technologies Incorporation is an American multinational ride-sharing company offering services that include peer-to-peer ride-sharing, ride service hailing, food delivery, and a micro-mobility system with electric bikes and scooters. The current stock price for Uber is at $26.79, and I think it's at a decent price right now. However, I just wait and possibly buy or wait for it to go for 25 mark. And so I do believe Uber is actually the future of the transportation system, since it is so convenient and it is just perfect for the people without any cars, and the people who want to drink and just want to hit up someone so they could pick them up and drop them back off at home. So let's look at the Uber website. This is the Uber website, and how it works is it works with the mobility. It's a mobile app, and also works at a desktop where you determine your pickup location, and then you get to get dropped off there. And they also have Uber Eats where they deliver food to you at a cost and a fee. And so they also have free truck service for business, for work, bikes, and they can fly now. So wow, I didn't know about that. So yeah, that's the Uber website and how it works. So let's now look at the 10 Qs for Uber. Gotta scroll back up, and then I gotta increase it a little bit more just so you guys can see it better. Right, here we go. So the revenue for Uber did increase every year. They actually doubled from 2016 to 2017, and then increased by an amount of $4 million. Just randomly. Okay, it increased to around 3.3 million from 2017 to 2018. So that is a good jump. Now the total costs and expenses do increase as well. Right here, it jumped 12 million, 6.8 million to 12 million to again 14 million. So that is just good things that you want to see from the company, and it's just overall just pretty good. Not amazing, not bad, just good. All right, let's move on down to the net income. It's just the basic and diluted net income per common share. And I do believe that is pretty good. Good because they need to pay out this amount more shares to their shareholders. So that is a good thing. That shows that their company stocks are growing as well. So yes, it is good. Now let's look at the cash equivalents. I have nothing to really compare this with, so let's just keep moving on down. Monthly active platform consumers. So again, the amount of consumers who use Uber is going up at an amazing rate, from 45% to 68% to 91%. And their amounts of trips are also increasing as well. So more people are hearing about Uber and using it more. So that is very good. Right, the net income loss attributable to Uber Technologies. So the net income, it went negative, and then finally it went positive in 2018. So that is just amazing. If it goes, I know that Uber started around 2016, so for them to go negative, even harder negative in 2017, and then go positive from 2018 means that they're making phenomenal growth. So that is just spectacular things from Uber. So here's just some of the risk factors. The personal mobility, meal delivery, and logistics industries are highly competitive with well-established and low-cost alternatives that have been available for decades, low barriers to entry, low switching costs, and well-capitalized competitors in nearly every major geographic region. So again, they do have a lot of risk factors, such as Uber Eats. They have competitors such as Grubhub, DoorDash, Deliveroo, Swiggy, Postmates, Zomato, Delivery Hero, Just Eat, Takeaway.com, and almost Amazon. They are not just the only delivery for eating. They have many competitors as well, and so does the Uber transportation system. They have many competitors such as Lyft, Ola, Careem, Didi, Taxify, and Linebird and Skip. So there are many just variety amounts of transportations who are in competitive market with Uber. So you guys should look out for that. And yeah, so overall the 10 Qs, their balance statements and all that, it does look very good. And I just name out the 10 Ks for it, which is the risk for Uber. Let's look more down to see if I can find more of the charts. Okay, I showed the charts already, so that's pretty much it. That is pretty much it for Uber. Now I'll be heading on over to Lyft with the fundamental analysis for Lyft. Stay tuned. Now that we got Uber out of the way, now let's head on over to the Lyft fundamental analysis. So Lyft Incorporation is a ride-sharing company based in San Francisco, California, and operating in 640 cities in the US and 9 cities in Canada. It develops, markets, and operates the Lyft mobile app, offering rides, scooters, and a bicycle sharing system, and a food delivery service. So So I know that Uber was found after Lyft, and Lyft is a much older system. However, I think Uber is more popular than Lyft right now. So let's move on to the website just to compare from Uber and Lyft. So Lyft, I believe, is more useful for the mobile app, and I think Uber set a more easier to handle website than Uber did. I mean, yeah, Uber did a more simpler job at creating the website than Lyft. So I think that's what Uber is currently ahead of in right now. And so let's look at the 10 Qs just so we can compare. Right, here's the 10 Qs for Lyft. All right, here we go. So the cash equivalents from December 31st, 2018 to March 31st, 2019 actually decreases. Pretty bad stuff. Total current assets decreases. Alright, this is pretty bad because it's 3 months, but it decreases from 3.7 from 2018 to 3.2 in 2019. So that's just bad stuff overall for our Lyft. So far, it just start at a bad note. So total liability, it does increase. And yeah, same stuff. So overall, not too good right now, not too hot. The costs and expenses for Lyft, the revenues, it does increase actually. The revenues for Lyft increases from 400,000 to 770,000. Now, not bad, not too bad stuff. It's just alright. And let's look at the net loss. So the net loss does increase a lot, and that is just bad stuff. Now let's see why it increased so much. It's because of the other comprehensive income and unrealized gain or marketable securities net of taxes. So over there in the headquarters that Lyft, they're doing something wrong. They're probably not organized or something. And I can just kind of tell from the website that they didn't look too organized with it. It just looked very simple, but Uber's looked very organized, and they just looked like they knew what was going on better compared to Lyft. Balances as of December 31st, 2017. So the shares, it went from 200,000 compared to the balances of March 31st. So they did pump up a little more shares, which is not too bad, I guess. And let's look at the paid-in capital. So yeah, of course everything will go increase since they increased the amount of shares. Redeemable convertible preferred stock, it also increases as well. No, it stays the same, exactly the same. So that is just the stockholders share portion of it, and it just looks, it's normal stuff, usual stuff. So let's look at the net loss. Net loss from 2018 to 2019 is bad, and I will say this part is pretty bad just because depreciation and amortization, it increases a lot, and also the stock-based compensation. So they owe a lot of people money, which is very bad. And cash flow from investing activities. Oh wow, that's actually very good. So they went from negative to 2018 to positive in 2019, from negative 819,000 to positive 670,000. So in terms of them putting back money into their company, it's very good. It's looking very good, which is a good thing. Overall, it's like wishy-washy. It's like there's some good things about Lyft and then some bad things about Lyft, which if you normal it out, it's just an average stock. Nothing that pops my eyes, nothing that I would like really look into. Assets again. So that's just the assets, liabilities. It's gonna equate to the same thing. Alright, so overall, I can't really say much good things about it. I just say, like I said, it's just average. So yeah, that is it for the fundamental analysis about Lyft and Uber, guys. Now stay tuned for the actual reveal and answer of which one we will pick, Uber or Lyft. Okay guys, now that we got the fundamental and technical analysis for Uber and Lyft out of the way, we'll be moving on to the main question of this or that. Which one would you choose, Uber or Lyft, Chart Doctor? Which one's a better stock in your opinion?
I'd say Uber is a better stock midterm to long term. However, they're both in a downtrend. So people are dollar cost averaging. Like people I know are dollar cost averaging for Uber. But so my targets for Uber would be for like when it breaks out to the upside would be 33.50 to 38.90. I have my paper here. And for Lyft, I have 49.20 to 62.80. So those are my targets. Like as a swing trader, I would sell out those targets. But if you're long-term investing, like yeah, just hold it to how much you think the value is. So how about you, Mr. Cheese?
For me, I would personally choose Uber as well. And I would actually enter into Uber right now just because it is at the support line, the lowest point you can buy right now. So I would actually buy it right now and then hodl it or just keep dollar costing average or if it goes down. But I actually see it going upside in like the next couple of months. And also why I choose Uber over Lyft is because fundamentally it looked a lot better than Lyft, and also Uber has Uber Eats and like other ventures with Uber, while Lyft only has the transportation system of Lyft. So that is the main reason why I would pick Uber over Lyft, just because Lyft was also founded a long time ago, while Uber was founded more recently. And just looking for the websites, and on a business standpoint, their Uber already has a lot more ventures and it's only been out for like 2-3 years. So compared to Lyft, who's been out for around over 10 years, and Lyft, who's been out for like 2-3 years, as a business wise and like venture wise, I pick Uber for that in that perspective.
I'd also like to add that they're both kind of like in an identical trend. Like their industry overall, their trend is just kind of similar. They're both in a downtrend now, but they're both poised to break out soon. So I just keep an eye on that. There are people, yeah, like I said, there are people dollar cost averaging, so just keep a watch for that. So thank you guys for watching. This was a this or that video for Uber and Lyft. Don't forget to like, comment, subscribe, and share the video. And also share your thoughts. Comment down below and let us know what you think. Thank you guys for watching. I'll see you guys next time. I'm Chart Doctor, and this is Cheese. This is The Profits. Peace.
Peace.
Later.